Hi, this is Paul from globaltradingsoftware.com, and great news, the manager, the trade management indicator that we have, is finally ready for the Thinkorswim version. So this is the first video I'm making of it, but I'm going to make it in the context of a trade on oil on the 15-minute time frame. Again, this is a Thinkorswim version. I'm also using the day trading bundle of trading indicators for that signal and confirmation that we always talk about here. So I'm going to use a couple of tools in there to show you the trade setup, and then obviously then switching to the manager and looking at how we manage this trade and we didn't panic on the recent pullback here. So we have a 6-star sell signal here, which is the XBRAT, so that's the highest probability trading signal for the XBRAT algo, but we haven't got confirmation from the divergence cloud at that point. We get that confirmation 3 candles later with this red down arrow and this cloud forming here. So our entry for this trade is at 66.11, below the low of this confirmation candle. Now sometimes that confirmation comes just before or actually on the 6-star sell or buy if you're going long. But right now this is where we are, and this is good. It's signal, confirmation, entry. Then we get into this trade. So actually we don't actually get into the trade, and it pulls back slightly. Then we get the big red candle coming down and pushing us into that trade at 66.11. And then it's down to the manager to manage this trade. You've got to listen to the manager. This is my trading brain. So we're looking at volume. So I'm just going to briefly touch on what these volume candles mean. So the candle that took us in was a red candle, so that's a distribution down candle. So there's more volume in that candle than the previous candle, so there's more sellers in the market. Also, you see the little cyan dot above that candle. That means that's higher than average volume as well, so that's a really big momentum candle there. The cyan candles that you get are down candles but have lower volume than the previous candle. And then you see the green candle, this one candle one day here, that is the accumulation volume. So that's more volume than the previous candle, and it has higher than average volume with that cyan. The blue dots underneath the candles are lower than average volume. So you can see momentum still builds with this trade, even though it's lower than average volume, because we're going into the end, the end of the day session there coming through. But these are really important when we get these pullbacks. So we see here the grey candles coming back up here. They have lower than average volume. The grey candles are up candles, but they have lower volume than the previous candle. Then another grey, then another grey. So the volume is lowering all the time, and it has lower than average volume. So we don't panic on this pullback. We don't get out of our trade because the manager's saying, hey, this red cloud is still bearish. Okay, this cloud has got that bearish bias. We have on this pullback, we've got lower than average volume. We do get a green candle there because that has higher volume than that previous grey candle, but it's still lower than average volume, so there's no panic. Then we get higher than average volume come in to the down candle, to the red distribution, higher than average, higher than average. It's pushing it down again. And this is a critical phase here. We can see on the cloud, our bias cloud, the cloud's starting to come together, but it's not green, it's not changed to green. We get this pullback, so we get a green candle, which is accumulation candle. So it has more volume than that previous candle, but it's no dot above it, so it's about average. Yeah. Then we get an up candle again, but it's grey, so that volume's already starting to taper off, and it has a lower than average volume. We get another green candle, but no dots above it again. So that's more volume than this previous one, but it's still not above average. Then we get these little candles with low and average volume dots on there. So we're not panicking. We're letting that pullback happen because we know there's no momentum in it, because the manager tells us that. We then start to move back down. Nice, a little bit of pullback here, all lower than average volume. Then we get higher than average volume red distribution candle once, twice, momentum starts again, and then we get it again here. We're pushing lower, even lower now. We're in this, and the cloud is starting to move apart again. So we can see now that we would still be in this trade. This is just a to highlight how effective the manager is, so you don't panic and get out too early, and to maximize those profits consistently. So 66.11 and we're at 63.30 right now. So you know we're getting close to 300 ticks for this trade. So it's a $3,000 trade this. By being patient. Now this is the 15-minute time frame. We can use it on the 5-minute, the 1 minute. We've got different settings on there. This is the moderate setting for the manager. If you're on the 1 minute, you would have the aggressive setting. If you're on the 30-minute, you'd have the conservative. We've even got swing trading settings as well, and I'll make another video on that in the future, for daily time frames, 4-hour time frames, that sort of thing. But I just wanted to show you that the manager's there to keep you in the trade longer, to maximize those profits consistently. Most traders on this pullback here would have panicked and got out, but what I've just explained, and the manager showing you not just accumulation distribution, but also what the average volume is. Where is it? Is it lower? Is it higher? And you know, and then ultimately the cloud as well. So you've got more aggressive stances to with the average volume and those accumulation or distribution candles to get out. If you get those big green candles with higher than average volume, you get more than one of those, then you get out. In this case, it was all lower than average volume, and the higher than average volume came in on the down candles distribution. More sellers. Red means more sellers, green means more buyers. That's the simple legend, if you like, for this particular manager. If you get green like here with higher than average volume, that's a warning sign, but the next candle's the important one, and we get lower than average volume, it starts to come back down again. Here we get a green, but it's average volume. We get another green here, it's average volume. It's fighting, but it's not winning. And then we actually crown on this like a roller coaster, runs out of juice and comes back down again, and we're still in this trade. Again, you can see up here this previous long where the cloud is green. Okay, these two red candles up here with higher than average volume, there's two candles on the trot there. That is the sign to get out aggressively on this long. If you didn't, when it turns to red here, that's the conservative exit for that long. So what we're waiting for right now is two consecutive green candles with higher than average volume to say, hey, get out, or the cloud turns to green. Right now, this short on oil is still going. Hopefully, for those Thinkorswim users, this really helps. But this is also available for TradingView, for Ninja Trader, for MotiveWave. And we're developing it all for all platforms because there's lots of signal generators out there, and our expert algo is one of the best on the market, and we get that confirmation from the divergence cloud. Again, a great combination. And there's thousands of different signal generators, but there's not many indicators out there that will actually really help to maximize your profits by managing the trade sensibly. Hopefully this helps. Speak to you all really soon.